Hi, this is Smart Money for CRNAs, made just for 1099s like you. We talk about taxes, smart planning, and how to grow your money, all in simple, short episodes. Just remember, these tips are educational and general in nature. For help with your own money plan, chat with a tax or financial advisor. Today's topic? A common problem for many 1099 CRNAs, not saving their receipts. Even people like Haron found it tough. Now, let's get started. Here's your host, Randy Larkin.
This is Randy Larkin from Atlanta Tax Planner. Today we want to talk about keeping your wallet fat by keeping your receipts. We're going to look at a tax court case that involves Aaron Veras. He owned a small trucking business. He worked hard, but he made one big mistake. He didn't write things down or save receipts. And when he got audited by the IRS, things got ugly. Let's walk through what happened and what you can learn so this never happens to you. Rule number 1, keep records. The tax law is very clear. If you want to deduct something from your taxes, you need to prove what you spent, why you spent it, that it was for business. If you don't have proof, the IRS doesn't care how honest you are, so keep your records. Cash payments. Aaron paid people to help him load and unload his trucks. This sounds normal, right? But he paid them in cash and didn't write anything down. No receipts, no names, no records at all. The court said, "We believe you paid them, but we can't give you a tax deduction if you can't prove it." So Aaron lost $16,000 in deductions. Ouch! For cash payments, you need proof. Travel and meals. Aaron also tried to write off his travel and meals for his business. But again, no records, no notes, no receipts. The court couldn't help him, even if it wanted to. The law says you must keep records for travel, meals, cars, and gifts. No records equals no deduction. This cost Aaron another $3,900. Miscellaneous expenses. He had $7,200 in miscellaneous expenses, but he gave the court zero information. He didn't explain what they were, no list, no proof, nothing. The court said nope, no deduction. Truck costs. He tried to claim truck expenses too. The court gave him a little bit of credit, like for gas, because they had some evidence to go on. But still, he lost almost $9,000 because he didn't keep good records. Medical expenses. Aaron had a baby that year and spent $10,000 in medical bills. But again, no paperwork, so the court couldn't help. He lost it all. The final tally. That's $36,000 in expenses. Gone. Poof. Now he will pay extra in income tax, self-employment tax, which is really Social Security tax and Medicare tax, penalties, interest. Let's say it louder for the people in the back. No records, no deductions. What you should do instead? Here's your action plan. Keep receipts, write down what the expense is for, use a notebook, app, or even just folders. Be consistent. You don't have to be perfect, just organized. A final thought. Aaron's story is a warning, but it doesn't have to be your story. Stay ready, and tax time won't be scary. You got this.
All right, friends, that wraps up today's show. We hope you learned something new. Head over to CRNAtaxes.com if you want to learn how we help other 1099 CRNAs. And get ready, our next episode is all about the Roth IRA. You won't want to miss it. Music licensed from PremiumBeat.com. Under license number 7394047.